Hello, everyone. Welcome to another episode of Income Investors. My name is Moe and with me today is John Whitefoot. We have another exciting dividend play for you, but before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. No matter how safe an investment sounds, it involves risk. To read more about it, please see the description below. Oil remains near $70 per barrel and continues to face pressure from the weaker than expected demand data out of China and recessionary fears. On the other hand, oil prices are expected to get a boost should OPEC announce new production cuts in early June. If you like energy stocks, but not volatility and uncertainty of the market, maybe it's a good time to look at today's pick. It's Hess Midstream LP, traded on New York Stock Exchange under symbol HESM. John?
Yeah, thanks, Mo. You're precisely correct. Despite uncertainty, Hess Midstream continues to report strong financial results and is making so much money. It's raised its quarterly dividend for the last 26 consecutive quarters. And the outlook for additional gains is excellent, with management targeting at least 5% annual distribution growth for its common shares through 2025.
So why is Hess doing so well despite all the headwinds in the energy market?
Well, unlike most energy companies that generate their revenue from current oil and gas prices, Hess is a midstream company, and it's on the receiving end of 85% fixed fee revenue-based contracts to gather, move, store, and export crude oil and natural gas, which is what midstream companies do. As a result, its bottom line is not susceptible to fluctuations in commodity prices. If anything, you can see it as a toll keeper that collects money, whether its clients use its pipeline or not. And its business model is designed to provide long-term resilient growth. For example, it has minimum volume commitments, providing it with downside protection. The contracts are set on a rolling 3-year forward basis, which means send or pay regardless, and they cannot be adjusted downward once set, and any shortfalls are made quarterly. It also locks in its customers to long-term contracts with commercial contract extending through to 2033. Fees are set annually for all future years in the initial term. And on top of that, fees escalate each year at the consumer price index. So basically, it's a win-win situation for Hess no matter what's happening with oil and gas prices. It also provides Hess Midstream with a reliable and growing cash flow. It also provides Hess Midstream with a reliable and growing cash flow base with opportunities to grow its business.
How are the financials looking given, what the company is, no matter what's happening to oil prices, the company tends to do okay. How are the financials looking now?
Yeah, Hess delivered, in the words of its CEO, solid first quarter results. So for the first quarter, Hess Midstream reported revenue and other income of $305 million. And that compares with $312 million in the prior year quarter. Net income came in at $142.4 million. After deductions for non-controlling interest, net income was $142.2 million, or 47 cents per share, compared with 50 cents per share in the same period last year. And distributable cash flow for the first quarter was $196.6 million, and adjusted free cash flow was $142.2 million. It also reaffirmed strong guidance for 23. Moreover, back in January, the company provided guidance through 2025. I know these are a lot of numbers, but it's important going forward and plays well to their dividend payout. So for 2024 and 2025, Hess expects net income and adjusted EBITDA to climb at least 10%. Adjusted free cash flow is expected to grow by more than 10% on an annualized basis in both 2024 and 2025. And that's more than sufficient to fully fund its targeted growing distributions. Hess Midstream is also extending its annual distribution per share growth target of 5% through 2025 as well.
And, since you mentioned distribution, what can you tell me about dividends that, income investors get?
Yeah, thanks to strong cash flow generation, Hess Midstream has been able to raise its distribution every quarter since it went public in 2017. Most recently in April, Hess announced it increased its first quarter distribution almost 3% quarter over quarter to 0.585 cents per share, or $2.27 per share on an annualized basis. So for an annual dividend yield of 8.3%, that's almost twice the current inflation rate. And that reliable growing dividend payout can help income hogs weather the current pressure on oil and gas prices, which is negatively impacting shares. So despite reporting consistently solid financial results, cash flow generation, and guidance. Hess Midstream stock is mostly in the red, down 3.9% since the start of 2023 and down 8.3% year over year. And that's a pretty bearish tone for a company that expects to report 2023 net income of around 620 million and net income and adjusted EBITDA to climb at least 10% per year in 2025. And despite being in the red, Wall Street is pretty bullish on Miss Headstream stock and thinks it's trading at a bargain, with analysts providing a 12-month share price target of between $34.50 and 35 cents per share, which points to potential gains in the range of 24% to 27%.
All right, John, thank you so much for talking about Hess Midstream LP, traded on NASDAQ under symbol HESM. The energy sector was one of the biggest winners in 2021 and 2022, and it could outperform the market again in 2023. Hess Midstream is well positioned to do well regardless. As noted previously, 85% of its revenue is protected by minimum value commitment. It has 3-year minimum volume commitments and annual fee increase based on CPI escalations. It doesn't really matter how the economy does this year or what the price of oil and gas. Its cash flow is protected and growing. This explains how it's been able to increase its distribution for the last 26 consecutive quarters and counting. That's it for today. We'll be back with another video soon. Stay tuned and don't forget to like this video and subscribe to our channel.